All right. So on today's episode, I am going to give you the top 5 reasons why today is the best opportunity that we have seen and likely will see to get involved in multifamily real estate, either as a beginner or to grow your portfolio. Hey, Small Axe community, it's your boy Nico. This show is dedicated to helping you use your small axe to build a personal empire. So, on this show, I'm going to share some real, raw, behind the scenes info that's going to help you build your own multifamily portfolio. So, if you enjoy this show, I would love it if you can share it with somebody that you think could get value from it and write a review. It's the only way that we can grow this thing. Now, let's get to work. Let's jump into this episode and start sharpening those axes. All right, we're going to jump right into it. So today's episode, I want to talk about the top 5 reasons why today is the best opportunity that we have seen and will see in the real estate investment industry. So right now, reason number 1, lower competition. 2 years ago, I would be bidding on a property and I would be outbid by 15 to 20 groups. Now, I only got my first deal, the 44 unit portfolio, right when the interest rates started going crazy and creeping up. What happened at that very moment was buyers got a little timid, got a little scared, and pulled out. I was competing against 3 groups at that time, according to the broker, rather than 15 to 20. What happens in these scenarios is when there's, let's say, a huge amount of demand, people tend to overpay. It happens in the single family market all the time. People will list something at, let's say, 500K. All of a sudden, you get 4 or 5 families bidding on it. They love it. They start getting emotional about it, and it gets bid up to 550, 600. It happens all the time. So once the competition pulled out, it provides us an opportunity to snag something or get a deal that is a great deal that could not have been done 2 years ago. Many groups, many people that I talk to and I know about are pencils down. Pencils down, meaning they're not even looking at deals, they're not looking at deals to acquire, and they're not analyzing or underwriting deals. That is a freaking no-no. You have to always be underwriting, analyzing, looking at, bidding on deals, and talking with brokers or wherever you get your deals. You have to always be involved. So the minute that I found out there was less competition, I got excited. I got butterflies in my belly, and you should too. There's historically, guys, we have to believe in real estate. We have to believe that real estate is an excellent wealth generating investment. You have to. And if you don't believe it, then don't do it. Go do something else. If you have to believe that historically it is. And for those people that don't believe in it historically and have maybe jumped in the game really late and just trying to flip multifamily real estate, just buy and get out of multifamily real estate, or have no real background, history, and love for real estate or understanding of it, they jumped in the game. For a few years, everybody was making money. All of a sudden, when the market shifts, when interest rates climb 5 points in a year, when there's a silent recession going on and people can't pay their rents, when expenses go way up and inflation is way up and things are going out of control with taxes and insurance, people get scared. They think that all of a sudden real estate is not a good investment and they pull out. Less competition means that you can get a deal today. Reason number 1 why today is better than it was 2 years ago: less competition. Now, this leads us to reason number 2. You can get a discounted property today. In times like this, we can call it a downturn, recession, silent recession, whatever you want to call it. The market changed, guys. In times like this, you might find foreclosures, although it's pretty rare in the multifamily space, unless you're dialed in and one of the biggest buyers, then bank might reach out to you on a foreclosure, but I haven't seen any myself. But I have seen distressed properties. I've seen people where partnerships are failing. They don't want to hold on to the properties anymore. I've seen where interest rates have gone up to the point where if they had floating rate debt, they need to get out of it and they're looking to sell either at cost or maybe slightly above. So let's imagine you bought something 2 years ago, you pumped a bunch of money into it, and now you're selling it at the same price. That's a freaking discount, guys. That is a discount, especially given that historically real estate appreciates. And today, interest rates are dropping a little bit, right? So they went up. I think they peaked around 7. We have a freaking loan at like 7.8%. Today, we could probably get that same loan at 5 point something. So we're going to modify that loan, right? Okay. So during these times when there are motivated sellers, people might want to get out of those loans, but they don't want to deal with the refinance, or maybe they don't have the capacity to refinance because there might be a cash in refi. There's so many situations that are going on in scenarios that are playing out where people are not necessarily underwater, but they don't see the value in holding these properties. And you could potentially find a discounted property from a motivated seller. Now, another discount is going to come because if somebody is selling today, cap rates have decompressed, meaning cap rates went up. If you know anything about cap rates, the cap rate is basically a number that we assign to a property to give it its value. To get the cap rate, you take the NOI divided by the purchase price. So people are not willing to pay as much today. So we all know that real estate, multifamily real estate, is run like a business where you have an NOI, net operating income. Let's take the example of $240,000. Your NOI after all income is taken in, all expenses have gone out, you're left with $240,000 for the year in NOI. You divide it by the purchase price of, let's say, 4 million, you get a cap rate of 6%. Back in the day when it was 2 years ago, when it was a little bit more competitive, that 6% cap rate would actually be a 5% cap rate. So now let's take that same scenario where we have $240,000 in NOI 2 years ago, which would have been valued at a 5 cap rather than today's 6 cap. We get a valuation of 4.8 million. So let's say today cap rates have definitely decompressed by 100 basis points or more, meaning I'm just keeping the simple example of 2 years ago, a 5 cap, right? $4.8 million. Today, it's a 6 cap, meaning buyers are not willing to pay as much. That 6 cap is $4 million. So that person, that seller, just is going to have to, if it's going to sell today, is going to have to take a discount of $800,000. You get that. You get that money. It is instant equity. You buy the deal for 4 million. It's really worth 4.8 million in a hot market, which it will come back around at some point. Now, a couple of years from now, that market switches. It is a hot market again. You're not going to sell it a 5 cap, and you're going to make that money back, along with other factors like there's going to be principal pay down. You could potentially increase rents. There's all these factors that go into the valuation in the future, and you could actually potentially make a lot more and increase that NOI and have it even at a 4 cap. Who knows? However, we don't underwrite that way. We will, during underwriting, typically increase 10 basis points per year until sale. So let's say we bought it today at that 6 cap of 4 million, we would increase it by, let's say we sold it year 5, that's our business plan. We would sell it at a 6.5 cap is what we would claim. However, we will likely also be increasing the NOI through enhancing operations, increasing rents, depending on what the property is and what the business plan is. So reason number 2, there is a potential to snag a discount today. You can get a discount because there are less buyers involved. You can get a discount because there might be some distress with the sellers. You can get a discount because cap rates today are at least 100 basis points more than they were 2 years ago. They've decompressed, meaning properties are cheaper. Although the issues will arise, obviously, that you have to get good debt on it because the interest rates have also gone up. But interest rates are coming back down. So just chill. It's all okay. Just make sure the deal cash flows today with today's interest rates and you'll be fine. Next, reason number 3, real estate is a hedge against inflation. If you feel that inflation is an issue, then buy real property. Why? As the value of money decreases, right? Inflation, your value of your dollar is going down, it decreases. Property values, real property, and rents tend to rise over time. This helps you maintain and even grow your purchasing power over time. So, reason number 3, real estate and multifamily real estate is a hedge against the dreaded inflation that you're all terrified of. All right, let's do reason number 4 now. So, passive income opportunities. What? Well, if you ever read the Purple Bible, Rich Dad, Poor Dad, Robert Kiyosaki. He talks about buying things, businesses, real estate, and other things, obviously. Businesses and real estate, buy them, buy things that will make you money. You want little armies of money making machines, things that are going to give you money, things that are going to pay you. So eventually, yeah, you work your butt off, you buy these things that will make you money, businesses and real estate, which real estate is a business. Multifamily real estate is a business. You buy multifamily real estate to pay you. Now you have your money at work. Your money is working for you. So let's say I bought a 10-unit apartment building. I have $100,000 in income. I have $40,000 in expenses. That leaves me with $60,000. Let's say my debt service is, I don't know, $30,000 for the year. That leaves me with $30,000 for the year. That's passive income that is not taxed the same way as active income is taxed, depending on your real estate status. Think about this. You can buy something, put your money somewhere, and you can have it pay you. Let's say that this simple example is giving us $30,000 a year. Perhaps you only need maybe $100,000 a year to live off of. Okay, so now you have one property, 10 units, paying you $30,000 in passive income. Maybe get two more. That gives you 90,000. Maybe get three more. That gives you $120,000 a year in passive income. Obviously, this is all loose, but that's the general idea. You're going to buy something that's going to be paying you passive income. Extremely important. So today is your opportunity to get less competition, to get a discounted property, to use this property for a hedge against inflation, number 3. And number 4, you're getting passive income. You're getting paid along with paying down the loan, principal pay down. So it's going to be worth more and more and more with every single loan payment that your tenants make for you. And last and final is appreciation. So yeah, real estate appreciates. Historically, it appreciates. You can't say if you're looking at a 2-year window or 5-year window, even that it is always true, because it's not. However, historically, it is true. If you hold this bad boy long enough, 5 years, 10 years, real estate appreciates. And remember, during that time, you're getting passive income, hopefully, if you got it at a good price, which you should today with the discounts, and you buy it properly, you're getting a discount, and people are paying your mortgage for you. So you're also increasing your equity and ownership of the property, meaning when you sell it, you'll have more equity in it. So people are paying your mortgage for you. They're giving you passive income. And the historical trend has been that real estate, multifamily real estate, appreciates over time. So let me recap these 5 reasons why today is an excellent opportunity for you. So reason number 1 is there's less competition in today's market. Hands down, I see it. If you're involved, you see it too. Reason number 2, there's a potential for discounted properties with distressed sellers, motivated sellers, and the increasing cap rates that we have seen in the multifamily industry over the past 2 years. Real estate, number 3, is a hedge against inflation. So if you're worried about your dollar being worth less, buy real property, and it won't be. Reason number 4, we can have passive income from the real estate investments that we acquire. People are paying down our mortgage. People are paying us that delta between paying down the mortgage and whatever profit is left over. We get that passive income. Long-term wealth building. So reason number 5 is appreciation. So real estate has historically appreciated over time, and it will continue to appreciate. Again, it might not happen in 1 year of ownership, but over 10 years, I guarantee there will be appreciation. All the while, you bought it at a discount, and people are paying down your mortgage and paying you passive income. So for all of those groups out there that are pencils down, please continue to be pencils down if you're in my market. If you want to buy good deals today, now is your chance. Here are some other final notes and quick tips. When you are buying your property, if you are competing against 10, 20 groups of people, maybe back down and don't be so aggressive, and just don't be so emotional about it. There will be another deal that comes along. Stick to the numbers. Simple, basic math. Does it make sense? Does it cash flow day one based on your underwriting, your stress tests, not the broker's underwriting? Okay. Make sure you're reading, researching, and looking at historical data. Use CoStar, RealPage, any data source that you can find, or as many as you can find, to see what the same units have sold for, the same buildings have sold for in years prior. Are you getting a discount? You actually might be getting a discount. Talk to the bank or multiple banks and see how they're analyzing and looking at the deals. How much are they willing to lend? If they're willing to lend up to 65% loan to value, honestly, that is very strong, saying that they believe in this property. They believe that it is a good cash flowing asset. It's important today to seize this opportunity. Take advantage of the fact that there are less people involved. Take advantage that there are more motivated sellers right now, that there is some stress, distress, that a lot of these fake operators, fake syndicators have jumped in to try to steal opportunities and bid things way up, which was a freaking no-no, and that they now pulled out. They're gone. A lot of them are gone. They're losers. They're posers. Don't be a poser. Remember that you are in this for the next 10, 15, 20, 100 years. You have to think in the long term. You have to think in the longer timeline, longer horizon. Real estate is a long game. And if you are dedicated and committed to it, you will be successful. There is no losing in real estate, or very little losing in real estate, if you're in it long enough and really dedicated, really educated, and really patient, as well as not acting emotionally, as I said before. Stick to the numbers, stick to basic math, and you should be fine. If you want some help underwriting deals, looking at deals today, if you're like feeling today's not a good day to buy real estate, give me a call. I will motivate you. I will tell you the reasons why in person. We'll have a meeting. We'll look at a deal together. We'll talk about why it's better to buy today than it was 2 years ago, why today is your chance to get involved, why today is your chance to grow whatever you have your portfolio. Let's make some passive income. Let's crush this game. Let's get a deal today that is going to be worth more tomorrow while the inflation is crushing the dollar and you have real property. Love you guys. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.